Welcome to Closing Markets. I'm Michelle Rook along with Brian Doherty with Total Farm Marketing. We had mixed closes in grain and livestock futures trade today. And Brian, let's talk about the grain trade because we did have some reaction to the small grain summary and the quarterly stocks report, which were out at 11 o'clock Central, and corn and wheat higher, soybeans lower. And let's talk about the stocks report first of all, because we did see a snugging of the balance sheet, or at least the end of the year stocks in corn, and it was a little bit of a surprise. Talk a little bit about where that came from and what it means as we go into the October WASD then.
Yeah, so it was a surprise and it wasn't. Now, let me tell you how it was a surprise because the number was lower than the market was expecting. So the estimate was 1.512 billion, came in at 100 or 1.377 billion. That's 135 million bushel change. And the
Really?
reflection there or the reason it's not a surprise is when you look at the way basis levels have been moving strongly to the upside all summer and even into the late into the year, something looked like we were short of inventory or there was some
True.
reason. And we saw that today. So the market really reflected a tightening inventory, which was probably already reflected in that basis. That puts things close to where they were a year ago, 1.235, but it snugs everything up. And what it really does is put the onus on the southern hemisphere now to come through with big production numbers, a good bean crop, and then second crop corn. Argentina's already on the dry side, so this is more fodder for the bulls. What it really does for prices, it probably just keeps pushing the low end of where the market may go to in harvest. It just keeps pulling that
Yeah.
or pushing that number higher.
So 274 million bushel stocks figure on soybeans, bigger than expected. And that was interesting as well. Some of that came from a little adjustment in last year's production or yield, didn't it?
It did a little bit of adjustment there, and then probably some adjustment for lack of strong export activity throughout the season. Um, I don't think we want to get over our skis too far. 274 million bushels, well, it's more. That's not a comfortable number. There's little room again for error in our crop harvest this year. And so far, I'm hearing pretty mixed results, even though it's early. And then South America expectations are for perhaps another 10 million metric tons. I think the market was down as much as it was today. The probably overriding concern is just is China demand going to surface and be there, and that might be coupled with a high dollar, just enough that beans couldn't hold up today. A 32 million bushel change, it's noticeable, but it's not, this isn't a game changing number.
Right. Wheat, the number there, stocks were as expected. The numbers there that were big were the production numbers, down 133 million bushels from what we saw previously. And so that really, I guess, shouldn't have been a surprise because we had been talking about, these drought areas and had been expecting maybe that to happen in earlier reports, right?
We did, and we were kind of scratching our head on the earlier reports that, boy, at least according to farmer feedback and to all of our surveys and talking to people, not only in the field but in the industry, that yield results were dismal in areas. It was a tough season. Spring wheat rebounded some, but still not a robust record-breaking crop. Remember, you carried in a tight inventory with low supplies in Canada last year as well. Drought conditions in the West continue to exacerbate itself. But probably the bigger issue in the wheat market right now is, I'm going to say, probably what no one was really looking for several weeks ago, and that's just an escalation of the big picture in Ukraine, Russia, where that's leading. Boy, a lot of strain there. Remember that agreement with NATO and Russia, Ukraine. That's only into November. It's not likely
Right.
to get renewed. So it's pretty touchy. And then you got dry weather. You got dry weather in the southern plains, Argentina, and parts of China.
And when we talk about the renewed interest in the Russia Ukraine situation, of course, Putin today coming in and verifying or confirming that they have 4 regions of Ukraine that they've annexed now, and the US putting some sanctions back on Russia. And so this corridor could get shut down fairly soon here, don't you think?
I'd be speculating, but all arrows point that way. I just don't
Yeah.
see any real way out of this. Hopefully, I'm wrong, but it looks like escalation and more uncertainty. Ukraine, 44 million people. You've displaced anywhere from 12 to 15 million people. Now you've got Russian citizens trying to leave in those, highlighted areas, and it's just a big mess. It's nothing but as business as usual, as I would call it. I think though we need to keep an eye too on just elsewhere in the world. Part of Europe, pretty wet in areas now, all of a sudden tough for winter wheat planting. Maybe in Russia. Russia boasts of this big crop, the world's largest supplier, and boy, they're kind of isolating themselves right now because of the
Mhm.
war. And we'll see if they get off to the kind of start that could allow for another big crop next year. But it seems like the winter wheat production could be off a little bit at this point.
Absolutely. Let's also talk about next week as we move forward. Of course, it was end of month, end of quarter. We probably got some positioning ahead of that. And the fact that we had the outside markets, a lot of certain nervousness about the recession, and that's caused a lot of liquidation in the Dow and the dollar going up. Will we continue to see that next week?
Well, it almost seemed like early in the week was a foregone conclusion that the dollar was going to race into the 120 area, which would match its all-time record high levels. And unfortunately, when you look at the big picture perspective, we view the dollar staying strong, even though it pulled back at the end of the week. What that means long term is likely that we'll see a continuation of concern for the investor, expectations that you have an inverse relationship between wheat prices, commodity prices, and the dollar. Look at the way the livestock market tailed off this week. Very difficult situation when you look at the exports. How do you predict exports when you have a dollar that's screaming higher? And I want to put this in perspective. The dollar from mid-September until late September, though it backed off, picked up about 7%. If you take that 7% times the price of beans, let's just say at what, pick your number, 14 and a half, it's about a dollar per bushel worth. So a lot of this downturn in beans may have also been somewhat tied to the dollar.
That's very likely. And I think the livestock futures actually kind of reacted to that as well, it seemed like this week, especially hogs, which are pretty export dependent. And we've got funds liquidating in both cattle and hogs here. The charts look pretty beat up, don't they?
They do very much so look beat up, and in particular, that December hog contract. If you were looking for it already trading a discount to have some life, boy, it sure did. We got up to 88, just over 88 level, and here we're now at 74. So you take $14 off the market in less than 2 weeks. That's a real beating, and we're seeing the same kind of concern in the livestock sector. Again, stock market just under heavy pressure, end of quarter, long liquidation by the funds, rebalancing of their portfolios. The equities have been beat up so hard we can't help but think that if they have a basket, and in that basket, let's just say it's 10% commodities, now it's overweighted. So they need to eliminate some commodity positions. And here we are, September 30th, the week before we really saw, I think, big liquidation because of rebalancing.
Okay. Do you think we'll see some recovery then as we start a new month and a new quarter or not?
Well, Hogs and Pigs report confirmed the supply is a little lower, 1% less than a year ago. We need to get the export market kicked in, but I think you will. The world situation hasn't changed much. That is, food supplies are tight, commodities are in relatively good demand. They're not strong demand when the dollar moves higher, but the world has to continue to feed itself. And with Russia, the biggest supplier of wheat, you take Russia out of the equation, and the exportable wheat in exportable countries is at 15-year low levels. Things are going to remain volatile, but likely well supported. We'll look for a rebound in livestock. We're not wildly bullish, but we'll look for a rebound. Biggest concern is just whether the consumer is going to chase the market higher. We're not too worried about that. They were buying 2 weeks ago, 3 weeks ago. I think this is just more of a liquidation phase.
Okay. Thanks so much for joining us, Brian Doherty with Total Farm Marketing. Okay. And we'll do Ag Day markets, and those are coming up here
Okay.
in
So we got to refer to last week, right?
correct. All right. So this comes in 3, 2, and 1. Joining us with market analysis, Brian Doherty with Total Farm Marketing. Well, as we rounded out the week last week, we did see end of month, end of quarter, but also we had reports on Friday, and it looks like the grains actually did react to that on the stock side in both corn and soybeans.
Yeah, Friday was quite the day where we just saw prices just blow higher right after the report. Very friendly number there, or unexpectedly friendly number. Pulled back, rallied back, but by the close, kind of got sucked down on big declines in the soybean market. Even wheat came well off its highs, trading 40 plus cents higher, finished in that 25 zone higher. You're running into a time of year where harvest is going to be the primary news event for the next 2 weeks. Your October supply and demand report is not out until the 12th. So when prices raised higher, we think we saw probably some farmers selling some hedge pressure, but
Okay.
also just speculative selling. That was a big gain in a short window of time for both corn and beans. Soybeans, unfortunately, didn't get the report people were expecting or hoping for. What'll be interesting, though, is the early yield results. If they sustain themselves, we can't help but think the crop could get a little bit smaller, and maybe we're going to lose another half a bushel or a
Okay.
bushel an acre. We'll see, but it seemed like the August rains were good, and if you didn't get them, it's not very good on the yield numbers so far.
So, Brian, the bigger numbers for wheat came out in the small grain summary with 133 million bushel drop in production. But did we really trade that, or was it more the Black Sea news?
Well, it's obviously both. I mean, that was a surprise number there, but the Black Sea news is paramount. That is an escalating problem, as it has not gone the route that many thought it would. It'd be over by now, or there'd be some kind of compromise. This thing's getting worse. I think the world needs to really think about, if they need wheat, buying it sooner than later, and that's the way the market really behaved at the end of last week, despite a high dollar.
Right. As we start a new month, new quarter, new week, do we see maybe a continuation of the outside market factors here in this market?
Well, there's the concern is that the Federal Reserve is going to continue to raise interest rates. All arrows seem to point to that. That means a higher dollar. You'll see foreign entities trying to purchase U.S. dollars and put pressure on the dollar upward in order to buy
Okay.
those dollars and reinvest it. Unfortunately, we probably continue with the dollar higher, and that worries the export market. But overriding that is going to be yield results, and we'll have a lot of data in the next 2 weeks.
Okay. Maybe a little harvest pressure on top of everything. Thanks so much for joining us, Brian Doherty with Total Farm Marketing. More Ag Day coming up.